Good morning this Monday, the 23rd of October. I'm Grady Wolf, market analyst with Bell Direct. Rising bond yields sparked a sell-off on Wall Street on Friday as investors remain concerned about the broader state of the US and global economies. The yield on the benchmark 10-year Treasury note topped 5% for the first time in 16 years on Friday, which offers investors a safer return on investment than the current volatility of equity markets in the US. The Dow Jones fell 0.86% on Friday, while the S&P 500 lost 1.26% and the tech-heavy Nasdaq shed 1.53%. For the week, the Dow Jones fell 1.2%, the S&P 500 shed 2.4%, and the Nasdaq took the biggest hit, falling at 3.2%. American Express shares fell over 5% on Friday after the big bank reported earnings per share that beat expectations, but revenue came in broadly in line with expectations. Tesla shares also tumbled over 15% across the trading week after the EV giant reported earnings on Wednesday that missed expectations on both the top and bottom lines. Over in Europe, markets closed at the lowest level in 2023 on Friday on rising Treasury yields and fears of further monetary tightening out of the US. Comments made by Fed Chair Jerome Powell in the US around the need to continue with a tightened monetary policy until inflation hits the target 2% range sparked global investor fears of further rate hikes out of the world's largest economy. The yield on the 30-year UK government bonds hit the highest level since 1998 on Friday, amid rising tensions in the Middle East and the global fear of higher for longer, pushing investors to favour bonds over other riskier investments in the current market. The Stoxx 600 fell 1.3%, Germany's DAX lost 1.64%, the French CAC shed 1.52%, and in the UK, the FTSE 100 fell 1.3%. Locally on Friday, the ASX 200 fell 1.16%, weighed down by the materials sector falling 1.7%, while the communication services and healthcare sectors each fell 1.43%. 10 of the 11 sectors on the local market closed lower on Friday as surging bond yields and tensions in the Middle East weighed on local investor sentiment as well. Energy stocks were the only equities to rally on Friday as the price of oil continues to climb as tensions in the oil-producing hub of the Middle East continue rising. Liontown Resources fell 32% on Friday as a lithium miner resumed trading following a trading halt to capital raise after US miner Albemarle walked away from its $6.6 billion takeover offer. On the commodities front this morning, oil is slightly lower at down 0.33% at $88.08 a barrel. Gold is up 0.4% at $1,981 an ounce, and iron ore is down 2.93% at $116 a tonne. One Aussie dollar is buying 63 US cents, 94.69 Japanese yen, 51.88 British pence, and 1 New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia, the SPI futures are anticipating the ASX to open Monday's session down just shy of 1% to carry the sell-off of last week into the new trading week. And now let's dive into some trading ideas for your consideration today. Bell Potter has slightly decreased the 12-month price target on Lynas Rare Earths from $8.50 to $8.20 and maintain a buy rating on the leading producer of rare earths following the release of the company's first quarter FY24 trading update, outlining production of NdPr was 17% lower quarter on quarter and 7% below Bell Potter expectations as maintenance works were carried out at Lynas's Malaysian facilities over the first quarter. And Trading Central has identified a bearish signal on Sigma Healthcare following the formation of a pattern over a period of 17 days, which is roughly the same amount of time the share price may fall, from the close of 66 cents per share to the range of 57 cents to 59 cents, according to standard principles of technical analysis. And that's all we have time for today. Have a magnificent Monday, and as always, happy investing.